Information about Finest Known's gold investment program and other precious metal investments is available at 1-866-697-GOLD. Wealth and Wisdom with the Market Guys. Business, real estate, investing, retirement, stocks, options, trading, financial opportunities, and political issues that will affect your portfolio. Keeping you informed of the latest financial news and trends in investing, trading, real estate, and business. This is Wealth and Wisdom with the Market Guys. Here are your hosts, Rick Swope and A.J. Monte.
Hello and welcome to Wealth and Wisdom with the Market Guys. I'm A.J. Monte. Today we have a very special outline here for you. We hope that you have your pens and notebooks ready, because we're going to show you how to find some money that might have your name on it. Unclaimed funds is what we're going to talk about in the second half of the show with Sidney Golub. But first, Rick, who do we have?
Well, we're going to start today with talking about independent research, and with us today we have Geoff Garbacz. Geoff is the co-founder and one of two principals in Quantitative-Partners, Inc., or QPI. QPI is responsible for the marketing and support both to institutions and individuals such as Phil Erlanger Research and Jefferson Research. They produce the Erlanger Squeeze Play. It's ErlangerSqueezePlay.com and TorpedoWatch.com. Geoff, welcome to the show today. Thanks for joining us.
Thanks for having me.
You know, I think the first question, we talk about independent research, and a lot of times we hear Wall Street research, and as if there are two categories. Maybe you can make a distinction for us as the difference between traditional Wall Street research and how independent research is different.
Absolutely. First, why don't we just kind of define the difference between Wall Street research and independent research.
Right.
Wall Street research is typically produced by a firm like Goldman Sachs or Merrill Lynch, and they have a big in-house research department. And what happened in the mid-'70s was that as deregulation occurred, all sorts of independent firms started to prop up as they could spin out of being inside of a bigger shop and set up their own entity. And so today I would say there's probably over 1,000 independent research firms providing research to both individuals as well as institutions.
Is there any type of specific regulation around these, or what? How does an independent research firm develop? What do you bring to the market that would differentiate you from what we call the traditional Wall Street firm?
Absolutely. The big break really took place in 1986 when the SEC basically amended the Investment Advisor Act to put in a section called Section 28E, and that allows for independent research firms to have their research paid for by brokers on a soft dollar basis. The equivalent would be, you know, if you're on an airline and you fly 100,000 miles, they're going to give you 2 or 3 trips. Well, if you do $100,000 in trading business, they'll pay for $50,000 of research. So on the institutional side, Section 28E is how it's regulated, and individuals, there's really no peer regulation of that. And you know what has happened is a lot of newsletters have propped up from the independent guys. That's really how it's taken place on the retail side.
You know, Geoff, this might seem like an obvious question to some, but I think it's an important one with regard to how you've and your firm have removed yourself from the bias when you're doing research. You're not involved with any hedge funds. You're not taking positions in any of the stocks that you're recommending or maybe not recommending. Expand on that a little bit so our viewers could really understand the benefits to them in a company that does not.
Absolutely. Yeah. I mean, and as we've moved forward and hedge funds have become a bigger piece of the puzzle, and even now Goldman Sachs and Merrill Lynch's proprietary trading becomes a bigger and bigger piece of the overall revenue mix of the profitability each quarter. There are conflicts because Goldman Sachs research analysts may be recommending a name and maybe the prop trading guys find out about something. So independent guys really strive to maintain their independence and objectivity. And the net result of what they're trying to do is to predict whether stocks are going to move up or down, or whether interest rates are going to move up or down, or how the economy is going to do. And they're only going to succeed from a business model standpoint if they're successful. If they make bad recommendations, they're out of business.
Sure. What